Hello, everyone. Welcome. Welcome to our training. Who is on the line? Can you just tell me? Hello. Hi, Tanisha. How are you? Who else is on the line? We are just waiting, and that's what I'm giving, like a couple minutes more so people can join. We have a lot of people interested. Hi, Jessica, Lacey, Paulina, Fatima. Welcome. Good afternoon, everyone. Rosalinda, Gloria, Maria, that's fine. So let's do it. I know that the majority of you know us as a Housing Action Illinois, but this is we may be expecting people from another state. So that's what I'm just going to do the intro. Welcome, everyone. If you lost connection or you got frozen, please log off and try to log in again, because Demio works best when you're using Chrome, Google Chrome, or Firefox as your web browser. So thank you for joining us today's training. My name is Vivian Cristino. I'm one of the capacity building specialists at Housing Action Illinois. As you know, Housing Action Illinois is a statewide coalition formed to protect and expand the availability of quality, affordable housing in Illinois for more than 30 years. Our coalition has more than 160 organization members that believes in an Illinois where everyone has a stable, affordable place to call home. We have 3 programs mission. In our capacity building work, where I work, we help housing nonprofits develop skills and knowledge through trainings, as well as through giving to sub-grants and administrative support to 33 housing counseling agencies as a regional hub counseling intermediary. We also manage a network of AmeriCorps Vista who serves with our members throughout Illinois. In our public policy advocacy work, we advocate for protections and investments that help homeowners, renters, and people experiencing homelessness, such as federal investments in housing counseling funds. Through our education and organizing work, we help people understand issues related to affordable housing and bring nonprofits together to learn and collaborate, such as our annual conference. Last year was virtual. Maybe this year we had to do it again, and I hope you join us. Today we are partnering with Legal Aid Chicago to present Get Ready for Tax Season, basic filing information and free resources. So Legal Aid Chicago provides free legal assistance in civil cases to people living in Chicago and suburban Cook County. In this webinar, you will learn how you can help your clients avoid federal tax problems and make sure they receive the maximum amount of benefits to which they are entitled. Also, we will share information about Legal Aid Chicago free tax clinic and resources for return filing. Remember, this webinar is for informational purposes only. You might need to make legal referrals. I'd like to introduce today's presenter, Kristen Lee. He is an staff attorney at Legal Aid Chicago in both the Consumer Practice Group and the Low Income Taxpayer Clinic, we call LITC. So Kristen represents working families and seniors in consumer protection classes and protection cases, including claims under the Fair Debt Collection Practices Act and the Truth in Lending in the Illinois Consumer Fraud Act and other consumer protection statutes. Kristen has been born and raised in Chicago, recognized a need for more LITC services in the city, and work with Legal Aid Chicago to open their new tax clinic. So Kristen is the 2017 recipient of the Abraham Lincoln Marovitz Public Interest Law Scholarship, and he is graduate of the Chicago Kent College of Law. But before we turn into the presenter, let's talk about logistics. If you want to obtain a certificate of completion, a test is required. Don't worry, the test is only 10 questions, and you will have the opportunity to take it twice if you need it. And it will be available until March 15. So you have like more than a couple of weeks. Once you have passed the test, you can download the certification of completion for your records. So after the webinar, you will receive an email with the instructions and a link to take the test and an evaluation, because your feedback is very important to us. And that one, it goes for also people that join us through their phones and you don't have access to those links, but I'm going to share it today as well. If you have any questions during the presentation, please type it into the chat. We bring it up during the presentation, and we also have time for questions at the end. So, okay, now without further ado, we will turn the time over to Kristen Lee. Kristen.
Yeah, thank you very, very much, Vivian, for that lovely introduction. To answer a question I see in the chat already, will we get a copy of today's PowerPoint presentation? Yes, you will. There's a PDF copy of the PowerPoint presentation that will be given out. It has some helpful links in there in case you need some more information. But yeah, just to answer that first question. Let's get started.
We go to the handouts and click there so you can download the presentation, so you can just follow Kristen the presentation while you are, with the download. Okay? Thank you. I just see that people is doing it. Great.
Yep. I see the clicks. All right. So this is a basic filing information for low-income taxpayers. Let's click this slide for it. But just to give you a brief introduction into low-income taxpayer clinics and the work that we do. In case you don't know, low-income taxpayer clinics are clinics that receive funding from the federal government to represent taxpayers in what are called, as a term of art, controversies before the IRS. We don't generally help prepare original tax returns. There's a separate IRS-funded route to go for that. There are what's called voluntary income tax assistance sites that are funded by the IRS to prepare tax returns for low-income clients. In terms of the work that we do, what counts as a controversy? The list is there. 1099s related to self-employment or debt or canceled debt that the IRS considers income. We would categorize that as a 1099 dispute. So a 1099 dispute could come up when you have a gig economy worker who say gets a 1099, but they should be an employee. 1099 means that a 1099 miscellaneous would mean that you're an independent contractor or a self-employed individual. So if there's a dispute about that, we can help with that. IRS debt collection, so somebody owes money to the IRS and they can't pay it, or there's a argument to be made that they don't owe the debt, we can help with that. ID theft cases, tax return, prepare fraud cases, we represent for the U.S. Tax Court. We represent in audits and examinations. I'll give more about sort of specific services we give later. But in terms of eligibility, we go by what's called the 90-10 rule. 90% of our clients have to be at or below 250% of poverty level. 10% of those clients don't have to meet that rule. So we usually refer people, if you have come across anybody with a tax problem, just refer them to us, because we can usually just give advice, even if we can't make an exception to that 90-10 rule. The start of the low income taxpayer clinic was really, if any of you are familiar with the work that the Consumer Practice Group at Legal Aid Chicago does, it was really sort of a natural extension of the work that we do in the Consumer Practice Group. So our priorities in the Consumer Practice Group is to preserve assets that clients might have, that clients desperately need. We do that by defending against lawsuits. We do that by prosecuting lawsuits, filing lawsuits ourselves. That's what we do with the clinic. We preserve assets that the IRS is coming after. The IRS has substantially broader collection power than a private creditor might have. For example, a private creditor can't garnish your Social Security benefits, but the IRS can. Just to give a brief overview of the presentation, again, we're going to start with some basic tax filing information that I think all low-income people should be aware of. Again, like Vivian said, this is for informational purposes only. This is just to sort of give you a brief overview of what sort of resources are available to your clients as they apply for housing or as they try to sort of resolve their housing situation. I think it's very important for anybody working with clients in the financial capacity to know sort of what funds are out there that are available. We also want you to know, like Vivian mentioned, where to send your clients for free return preparation help and where to send them if they come across a tax issue, have a problem with the IRS. We're going to start with filing status, who must file, why file a tax return, what is income, what the IRS considers income. We're going to run through the dependent rules for 2020. We're going to talk about some major tax credits that benefit the clients, that benefit low-income taxpayers. Some common tax return errors, the services that I'm going to get into more detail about the services the clinic offers, and then I'll talk about some other free tax return preparation sources. Filing status. It's based on whether you're married or not, is the short answer. If single, if you're unmarried and you don't fit into any other category, you're single. You can still claim most of the major tax credits that are available to low-income taxpayers. Head of household, there's a misconception that you have to be divorced before you can file for either single or head of household. You don't have to be legally divorced to file for head of household. You just have to be separated and apart from your spouse for at least 6 months of the year. Married filing jointly, there's a lot of benefits for that. Married filing separately, there's not a lot of benefits for that. The tax code really punishes people for filing married filing separately. For example, if you file married filing separately, you don't get the earned income tax credit, and I'll get into more details about why the earned income tax credit is such a big deal. Qualifying widower, that essentially extends the time that you can claim married filing jointly benefits. And it sort of treats you as head of household also in some areas. Filing thresholds. Who must file? Who must file the tax return generally depends on how much money you make. Specifically, it depends on whether or not you made over the standard deduction amount for that year. The amounts listed here are the standard deduction amounts. If you exceed those amounts, you have to file a tax return. There are other special rules for, there's a lot of special rules actually, but this is generally the threshold for whether or not you have to file a tax return. If you only receive Social Security benefits, you generally don't have to file a tax return. There's a little caveat there that gets pretty complicated. Gig economy workers is a big potential client base of ours. If you make more than $400 in self-employment income, so if you receive a 1099 miscellaneous, you have to file a tax return. And you're still eligible for credits, by the way. So what are some of the reasons to file a tax return? Well, the first reason is probably what deters people from filing a tax return. I have friends who say, oh, I want to get my tax return prepared at H&R Block or somewhere. They show that I would owe return. I was like, oh, never mind. I'm not going to pay that. I don't advise that. If you owe taxes, file your tax return. If you don't file your taxes, and you don't pay it, you'll get a failure to pay penalty. But there's ways to mitigate that. There's ways to get that reduced that I can discuss later. But in addition to the failure to pay penalty, if you don't file it, you get a failure to file penalty. Those penalties add up. So if you owe taxes, you're not doing anything by not filing your tax return. The IRS will likely be able to get that information from another source. So it's always best to file tax return if you owe taxes. Another big one, the 3-year limit. There's a 3-year statute of limitations for requesting refunds from the IRS. So for the taxes for 2017 were due on a 2018 tax return. This is the deadline. That deadline to request refunds for 2018 is April 15th of this year. So that's another reason to just file a tax return. And it's dependent on your situation in the tax year for which you were claiming a refund. So if you didn't have kids back then, you try to go back and get a child tax credit because you had a baby this year, that's not going to work. The center there prevents ID theft and dependency issues. If you file a tax return with your Social Security number or with your child's Social Security number, no one else can use that Social Security number. If you e-filed your return and somebody else tries to e-file a return, the IRS will reject that return and say, hey, somebody already used the Social Security number. Same thing goes with somebody claim the child on your tax return. I'll talk about more issues with that at the end of the presentation. Refunds. EIPs, I'm going to talk about later. That's how you get your EIP. You have to file your tax return this year to get your EIP, and it's how you get refunds, the credits for everything I'm talking about. Another big one down there, as you all know, even if you don't need to file a tax return, it's a good permanent record of your income for a particular year. It'll be accepted by most creditors. It'll be accepted by federal public benefit departments as proof of your income that you earned. Generally, the benefits of filing tax return outweigh the cost of it. What is income? The 661A is the Code of the Internal Revenue section. It's phrased broadly. Income derived from all sources, whatever income from any source, whatever derived, must be reported. That's what gross income is. So typically for our clients, that's wages from employment. Let's report on a W-2. Distributions from pensions, retirements, or whatever. That's 1099-R. Unemployment insurance, you have to report unemployment insurance. I know that's going to be a big deal this year. I know a lot of people receive unemployment. You have to report that. Miscellaneous, 1099 miscellaneous, is self-employment income, so gig economy workers, anybody who has self-employment income or a side business or anything. Cancel mortgage debt. The IRS considers mortgage debt that has been canceled, or most debts that have been canceled, to be income for that year. But there's a way around that I can get into later. An informal arrangement of child support between spouses, whether that's living together or not, is not income. You don't have to report that on your tax return. Some income-related rules related to housing. Like I mentioned, 1099-C, cancel mortgage debt. Generally, whether or not canceled debt is considered income depends on, as it relates to home, depends on whether or not it's what's called a recourse loan or a non-recourse loan. A recourse loan is one in which the homeowner has personal liability for the debt. A non-recourse loan is one in which they don't. Generally, debt forgiven on recourse loans is considered income. However, there is a major rule, especially helpful for our clients, and when we in our consumer practice group, when we do foreclosures or we do bankruptcies, there's two major rules. One is the bankruptcy exception. Debt forgiven in a chapter, either chapter 7, 11, or 13 bankruptcy is not income. But again, you would have to file the form 982 before you can have that disregarded as income. The biggest one, though, is the insolvency exception. Again, you would have to file your income tax return with the form 982 to claim this exception. Insolvency just means your liabilities are more than your assets. Assets includes income too. If the taxpayer can show that, then that cancel mortgage debt will not be considered income. It will be excluded from income, thereby reducing the tax debt. The other stuff here, don't want to get too much into. This is more tax planning stuff, but there are ways to reduce your tax liability if you're a homeowner experiencing any one of these situations. So I'll refer back to the slide if you have any questions, and there's a helpful link down there if you want more information. Verifying income. How does the IRS verify income? Well, the main way they do is through information returns. Employers, if a taxpayer receives a W-2, they will report the W-2 to the IRS. The 1099 miscellaneous, Uber does report those the W-2 to the IRS. The IRS also speaks with other public benefits agencies and other government agencies. They can verify the amount of Social Security benefits somebody's receiving. They can verify the amount of unemployment benefits somebody's receiving. So if you can have unemployment benefits withheld from the checks that they give out. If you mess up something or misreport something for your unemployment, the IRS can verify that the amount. If something was withheld, they can verify the amount that was withheld. They can verify the benefits that were given out. So that's why I mentioned not filing a tax return won't really help you avoid any other trouble. Important for you to all know, you can, if you're in the process of doing some financial analysis for a homeowner or somebody looking for housing, there's a form you can fill out to request their the tax transcripts. Transcripts, sorry, are accepted by almost everybody. Everybody e-files their tax return now, so there won't be a physical copy of the tax returns. So if a creditor or some other organization asks for an actual physical copy of return, that's not really uh, likely to produce anything. So tax return transcripts, you can request them. You need to, if you need to verify some W-2 information that a person that you're talking to reported to you. This is a problem. This is usually what is needed in the case of formerly homeless people or incarcerated taxpayers who have been without housing for a while and don't really have access to any of their documents. So one of the things that we actually do as a regular part of our clinic is to request tax transcripts for people who are trying to apply for public benefits or apply for credit. Dependent rules. Here they are. You need these rules to apply for many of the dependents and child tax credits. You need to have the appropriate relationship. The relationship rules are listed there. The child must be under 17, so not 17 is what that means. Some people say, oh, 17 under. No, they have to be 16 and under. The big rule is that the child must have lived with you in the United States for more than half the year. Sorry, computer just froze. All right, the taxpayer has to have the appropriate tax identification number. Some credits you can have, you need a social security number. Other credits, an I-10 is fine. That's relevant for undocumented folks. And the child must be a dependent. So you have to meet the dependency rules, which means they can't be providing for their own support for more than half their support. Some relative dependent, what are called QRs, qualifying dependent relative. Anybody who's not a qualifying child can be a qualifying relative. It can be anyone, so as long as the person has lived with the taxpayer for the entire year. The last two are the big ones. The taxpayer has to provide for more than half of the qualifying relative support, and the QR needs to have that income below $4,300. The child tax credit is a big one. It maxes out at $2,000 per child. However, only $1,400 of it is refundable. That means the rest of that $600 can only be used to decrease your tax debt as a credit. But people who work usually, well, if you work, that's what it maxes out at. So if you work the right amount of hours, you will max out your child tax credit. So it helps if you're working along with claiming this credit. Same the dependency rules apply to this. Credit for other dependents. This is $500 non-refundable credit. This is really to cover dependent adults, just to sort of ease the cost of caring for a loved one. But like I said, it's non-refundable, so it can only serve to reduce your tax debt. Credit for child's and other dependents' care. This is an important one. So this is a credit to offset the cost that you paid to care for a dependent or child. The big one here to remember is the second one. The care has to be needed for the child or dependent person to work or to look for work. So you were paying for this care so that you can go out and look for a job, or so that you can go to work. That's the thing. If it's a two-parent household, both parents have to have needed for work, unless they're a full-time student. and you have to, it's capped at however much income you made. Economic impact payments, aka stimulus checks, now called the recovery rebate credit if you didn't get it. The only way to get it now is to file your 2020 tax return. If everybody remembers, some checks went out, I think it was probably almost a year ago now, probably back in April. Last year, $1,200 checks went out, and then $600 checks went out. Dependent adults were not eligible to receive those checks if they were claimed as a dependent on somebody else's tax return. You got an additional, I believe it was 500 or maybe 600 for a child, for a dependent child. There's talk about a new $1,400 tax coming up. It was supposed to be 2,000, but I'm not going to mention that. I don't know. Whatever rules they put on that check is whatever rules they're going to put on it, but everybody's expecting that. Some common tax return errors, all the errors that you can think about coming up. People putting wrong social security numbers there, misspelling names for dependents, not entering the social security number exactly as it is shown on, not putting the name on the social security number exactly as it's mentioned, and then just plain old math errors. Misclaiming credits, yeah, so just common mistakes people make. These will delay your return by a decent amount. So if somebody's filing a tax return and they need the money quickly, this it's worth it to go to a free prepare service that you know is gonna is trained to prepare tax returns, and that will ensure that you get your refund as quickly as possible. So pay close attention to the application. All right, the big credit, the earned income tax credit. This is the largest in terms of effectiveness, in terms of the number of people it reaches, in terms of the amount of money. This is the single largest effective federal anti-poverty program. This sort of highlights the many roles of the IRS. One part of it is the part that I deal with, which is the big scary collection part of it. But another part of it, I think people are realizing this year, is that they're a purveyor of public benefits. Like this is such a massive program, and it affects so many people. If you qualify for it, you get it. It's an entitlement program, so this helps a lot of people. So yeah, this is definitely something that you want to be aware of and keep in mind. I'm going to briefly go through it, but you should definitely refer to the links that I have included in the slide to get more information about this, and to make sure that this is to check to see if this is an available source of funds for your clients. This is about the amount that people generally receive on an earned income tax credit. It sort of operates as a bell curve. So the more you sort of make in between a certain range, the higher your earned income tax credit is. If you have children, as you can see, your earned income credit maxes out at about $6,600. So it's a very large amount of money that people wouldn't otherwise have. General requirements, like I mentioned before, I would go to the middle. You can't do married files separately and claim an earned income tax credit. You have to make sure you have all of the social security numbers for the qualifying children. I would recommend using the EIT assistant tool if you think a client qualifies for this, as at the end of this presentation. And a big one is your investment income. It has to be below $3,600. Investment income includes rental income, so that might be relevant for some of your housing clients. You have to be a U.S. citizen or a resident alien to claim it. No foreign income. And then you have to meet those rules as discussed earlier about the qualifying child or dependent. Some common earned income tax errors, like I mentioned, you claim a child that doesn't qualify for you to claim the credit. If you report income and expenses improperly on a Schedule C is filed when you have a self-employed worker. Sometime they might list some investment income that might kick them out of eligibility for the income tax credit. Sometime they might list foreign income and that'll kick them out. Make sure you get your filing status right. Make sure you get the social security numbers right, and I would refer to that website link there for more information. The penalties can be severe for wrongfully claiming the earned income tax credit. Right there in the middle, you see 10 years. 10 years, you'll be barred from claiming the credit if you file it fraudulently. So if you file a tax return claiming the earned income tax credit, you won't be able to file for, and the IRS finds out about it, and they probably will. You won't be able to file, get the EITC for 10 years. That's a large part of somebody's working life to not get this amazing benefit. They'll penalize a return preparer $500 if they mess up a EITC refund. If you just make a simple mistake, you can't do it you can't qualify for EITC and again until the next year. But if you just file there's a form 8862 form. It should be in one of the links I sent. One of those forms should. If you file it with the tax return, you should be able to get the earned income tax credit if you just made a mistake. If you're reckless, they ding you for 2 years, and there's nothing you can do about that. Refer to these resources for more information about the earned income tax credit. Like I mentioned, this is a major resource for low-income taxpayers, especially low-income workers. So feel free to check with those sources if you think somebody qualifies, or refer them to a low-income taxpayer clinic or VITA site if they have any troubles. Okay, so what are some of the ways that we help? What are some of the cases that we deal with? I'll start with the collection alternatives. This is what the IRS refers to their sort of debt collection procedures. The first one there is called an offer in compromise. This is sort of like a bankruptcy for your tax debt. This is sort of like this is an agreement between you and the IRS that you will be forgiven from paying some of your tax debt in exchange for either a lump sum payment or either a lump sum payment or payments paid over a period of time, a short period of time. Our low-income taxpayer clients usually get away with paying $50. There is a rule that says you can't reject an offer because of the amount of the offer. Whether or not the IRS accepts an offer in compromise depends on sort of whether the taxpayer has assets that the taxpayer can liquidate to pay the tax debt. The IRS looks closely at that. But this is a good resource for, let's say, retired seniors who aren't working anymore and can't really bring in a large amount of income and also support themselves. Another option we go is called an installment, what the IRS calls an installment agreement, typically called a payment plan. We work out something if the taxpayer has some income coming in, but they just can't afford to pay a $3,000 tax debt right when they file it. You can actually apply for a payment plan when you file your tax return. So if you have a taxpayer who knows that they're going to owe money, we've had the situation come up where we think that a taxpayer will owe some money in the future. You can at least either avoid or reduce the failure to pay penalty if you enter into an installment agreement when you file your tax return. Another good reason to file your tax return. Installment agreements usually depend on how much disposable income the person has at the end of the month. Hardship status, also known as the IRS as currently not collectible status. This is if a taxpayer cannot afford to pay a tax debt and meet their monthly living expenses. So that's really the test, is to see how much income is left over. If nothing's left over, then they don't have money to pay for the IRS. Each of these collection alternatives requires what's called a compliance. There's a tax compliance requirement, which means you have to file all required tax returns, which is why the information before is important. So seniors, it's really easy it's easier to get into these collection alternatives because they generally have a filing requirement. Some substantive cases, ID theft, that's a big one. That's really one of the things that sort of motivated me to get into this work. ID theft and sort of return preparer fraud. There's a lot of scammy tax return preparers out there who take people's money, and yeah, I'm sure some of you know about it. Innocent spouse relief. Generally, when you file a married filing joint return, both of the spouses are equally jointly and severally liable, so equally liable for the tax debt that's shown on that return. However, sometimes one spouse may not have anything to do with it. They may not know anything about it. In the cases of sort of domestic violence, you have one taxpayer who has control of all of the finances, and so they sort of really dictate whatever is shown in return. I actually have a case like that right now. Um, yeah, so that's a situation where we could come in and request innocent spouse relief. Um, independent contractor disputes, I mentioned this earlier. Uh, so some of you might know whenever you if you get a W-2 from a job and there is an amount withheld from that, the amount that part of the amount that's withheld goes towards the payment of payroll taxes, uh, whatever, for Social Security and Medicare, all that stuff. Um, what really happens is your employer pays half that tax, and then you pay the other half of that tax. However, some businesses, they don't want to pay any of it, so they'll say, "Hey, you're an independent contractor. Uh, I'm gonna give you a 1099 miscellaneous, even though I set up all of I dictate your day. I give you all of your materials. I tell you when to go, where to go. You are an independent contractor. Uh, so I'm just gonna give you this 1099, so that they can avoid paying that payroll tax." However, what ends up happening is because of the 1099 miscellaneous, and there is a such thing as a self-employment tax, the taxpayer will end up having to pay all of the taxes on that income, uh, when they really shouldn't have to. So if somebody is an employee and are misclassified as an independent contractor, we can go in and dispute that and sort of relieve them from that additional tax liability. Audits based on the earned income tax credit. If somebody's rightly entitled to the tax credit, we'll do it. Dependents, if somebody else is in a dependency dispute where somebody else claimed a kid, or somebody claimed someone else's child on a tax return, we can go in there and sort of sort out who deserves the refund, who deserves to claim the dependent. Um, Income and Schedule C related audits. Schedule C, usually the issue is around sort of gig economy workers or people who use their car for business. Sometimes we have issues. Sometimes they have issues verifying how much of their use of the car was business related. So we can come in and help them out by sorting that out with the IRS. Tax court litigation, collection due process hearing. So somebody, if the IRS is, let's say they have a tax lien on somebody's home and they're about to foreclose on the home, we can come in and uh, see. We can come in and sort of negotiate collection alternatives and say, hey, this person is entitled to what's called collection due process. So we have a right to see whether or not this collection method that you chose, taking somebody's house, is appropriate for this taxpayer based on their financial situation. Refund suit. So if somebody, uh, the IRS denied somebody a refund and it went all the way up the IRS ladder, we can take them to tax court. Uh, IRS administrative appeals. So if somebody has a case before the IRS and they get denied, you can appeal that case up to the tax court. There's a link down there for some other lower income taxpayer clinics that might be in your area if you're in other parts of the state. So I'll just use that link. And then finally, some free filing tax resources. If you can, if you come across somebody, if you analyze somebody's financial situation and you found out that they haven't filed a tax return, direct them to these free resources. The IRS free file site is live. Uh, the income limit is about 75,000, so it's pretty high. So if somebody is tech able, just have them sit down with their W-2, their 1099 or whatever, and just fill out their tax return online. It's free, and they'll get their refund. And they'll know they're not being scammed. Um, the bottom, or the right there, in Chicago, the primary resource for tax return preparation is a place called Go Ladder Up. Ladder Up. They have a Vita site there. They do a bulk of the tax return preparation for the city. To find a volunteer income tax assistant site, tax assistant site in your area, there's a IRS Treasury tool search that you can use. Just type in your zip code and the nearest Vita site should pop up. And with that, I will open it up for questions if anybody has any. If anyone wants me to
Thank
dig
you,
deeper on
Kristen.
anything.
Yes, we have a couple questions here. One is like, what about a child who is 17 years old or plus and lives with parents and work? Do you include the child's W-2 when filing taxes, or the child has to file separately?
I'm not sure. So if the child gets a W-2, the child should be filing their own tax return. But I'm trying to see if I could understand. What about a child who's 17 as a parent and works? Yeah, that's just an adult. It's just the person will file single. From again, I don't take this advice, but yeah, that's just an adult if they will
So they
file
can
single.
file themselves.
But if you're the parent of the child, you wouldn't. I mean, this person may qualify as a dependent, but there is that limit. But yeah, if the parent wants to use the child's W-2 for filing a tax return, I don't think they could do that. It would be different if the child was in school and the child got a 1098T, which is for tuition payments that they can use to apply for some education credits for that child. But I will check with the dependents rules for that particular
Thank you,
situation.
Chris. There is another one here. Do you know what the form number for the recovery rebate credit?
Yeah, let me get that for you. That is, I'm glad you brought that up.
Thank you, Elise, for asking the question. Okay, in a minute we're gonna get it, Elise. Jessica asks, what about those that file with an IT number? Can they get the child refund? Yeah.
With the 910 number, I believe they can. The requirement is that the adult has to be a United States citizen or lawful permanent resident or resident alien. The child is still eligible for tax credit benefits, but I will check with that rule. But so far as I know, the child can you can receive a child credit based on an undocumented child.
So that means that, everybody has to pay taxes, even people with IT number, no social security, they fill up the taxes and they can get the child refund because they are paying the taxes. So that is correct? Okay, thank you. Yep. And we have another one. We wanted to know if you are going to talk about the claiming stimulus money that you didn't get.
To claim the stimulus money that you can get, the only way to do that is file a 2020 tax return. So if you didn't get all of your money, or if you didn't get any of it, then you have to file a 2020 tax return. That's the only way.
So to understand you, if you receive it, you have to put it on the taxes. If not, you don't have to do anything. Even you asking for, but you didn't receive it.
Yeah, if you didn't, you should check the status of it. I should put that number in there. I'll put the number down in the link. But yeah, the only way to get it now is to file your 2020 tax return.
Okay, thank you. So we are waiting only for while you're just looking for what is the form for the recovery rebate credit. I just wanted to share with you guys if you go and check in the handout, I just put the Low Income Taxpayer Clinic. Just click in there and get that information. So you want to have everything regarding legal aid, how they are working on the taxpayer clinic. We are in the season, and it's gonna, so that one will be great that you have that information. Also, I have here another question, and I'm gonna ask that one. Some shares let me just check that one. So son shares joint custody with mother. Court papers allow him to file child as DIP this year, but mother has filed already claiming child as a non-dependent.
Yeah, that's the thing I would refer for that person to the tax clinic for. That is a big issue. We have a family practice group. That is a big issue around divorce. It's really just a family planning issue. Uh, it the goal of the parents ideally would be to maximize the amount of credit. So if you have a parent that's working right now and they can claim the kids and they will get a higher earned income tax credit, or they'll get a higher child tax credit, then that's an issue. So sort of that's worked out in the divorce case. But was there a particular question in this case about whether? Well, she's gonna. I will refer to us, but if the husband filed first, and she tries to file either electronically or she sends in a tax return, they're both going to get a letter from the IRS. She's going to get a letter denying her the credit if the husband filed first, because it really is just a sort of race at this point. But I would give more advice than that, but I would just refer that person to.
Okay, so for Linda, I think it would be helpful if you just go to the Legal Aid Chicago, the tax clinic, to just make sure that your client get, a right answer for the particular case, because there are another details that might need to know. So there is another one here. One of my clients received the $1,200 from their non-child support paying parent, but no the $600. So how they file for that amount?
Can you? Oh, sorry.
Yes, one of my clients received the $1,200 the stimulus payment from their non-child support paying parent, but no the $600 that came later. So how they file for that amount?
One of the clients received $1,200. I'm just trying to understand how to file for that amount. Are you talking about the earned income, not the economic impact payment? I'm assuming you're talking about the economic impact payment. But again, you would claim the amount that you were owed on the tax return. I mentioned that there was a form before. I was thinking of another form. You would just literally claim that amount that you were owed for the. Yeah, there's a place for you to claim it on the tax return.
So there is a place.
Trying to find it, but yeah, if that person didn't get that $600 and they were entitled to it, they should claim it on a.
Okay, so while you're still and hi, we have another one. Okay, you can see it. What happens when you receive tax documents for employment benefits for 2020, but he never received the funds? So currently his status is in the ESC database, is listed as benefits pending.
Yeah. This is a problem that's going to come up this year. Declare your income as you would see it, and again, the IRS. If you didn't receive any funding, the IRS will have access to that information. So if you got tax documents saying that you received unemployment benefits, and you didn't receive them, don't report it. Sorry, I should say don't report it. The IRS will find out eventually. This is a sort of an emerging problem that's coming up this year in particular. So I think the IRS is still working that out. So I would just say, if you got I said don't report it. Report it on a tax return anyway, and then it will be sorted out it has to be just sorted out with the IRS later, because that 1099-G it would would show up on the IRS's verification record. So that needs to be reported. Unemployment income needs to be reported, and if IRS knows about income, you have to report it.
So basically, that means that even the IRS have issues and haven't even sent their funds, from 2020, we still have to fill out the taxes no matter what. And IRS will figure
Yeah.
it out hopefully one day.
Yeah, I'm going to follow up with
Okay.
for all these questions with sort of more detailed answers. But I'm worried about getting into sort of advice at this point. That's why you see me hesitating a little bit to answer some of these questions. But yeah, I will follow up with sort of more detailed questions or detailed answers about all of these. I'm writing them down. That's why you see me looking at me.
Okay, so thank you, Kristen, and thank you everybody for your questions. I hope you have downloaded the resources, the presentation, and the low income taxpayer clinic. Now I'm going to launch to you the final test if you want to have a certification of completion. So just click in there in the picture that I just launched it, so you can take the test and in that way get the certification of completion. If you are joining us from the phone, don't worry about it. I will send you that information later. It is not later today. Tomorrow morning, I will send it to you guys. So you're going to have that one. Also, I want to, if you just have thinking about another question meanwhile, and when Christine is looking for the form number that we just talking about, Chris, right? So,
Yep. Oh, sorry. Yeah. I will send you
okay.
a follow up for that because I'm just claiming
Okay.
on the tax return.
And I'm going to also share with you guys training evaluation. So please help us to improve our trainings, answer the questions in only 2 minutes to answer, but it's going to help us a lot. And also you can just give us ideas. So if you have a need for a training, let us know. So Housing Action, we will do the best to please you and just bring more trainings and more information for you guys. So click in there, please, and just get it, the training evaluation, and also the final test if you want to take it. Okay, I see people just doing it that right now. That's great. I know that we are like 5 minutes over time. So thank you so much, Kristen. Let me check if we have another question on the chat. Yeah, I'm gonna get it, Harlet. Here is the link for the final test. Okay, that's great. It's only 10 questions, multiple choice, so true or false. But I think everybody's going to pass the test because we just give you the presentation. So that one is great. And the training evaluation, I'm gonna share it again. So please help us to improve trainings. Meanwhile, everybody else, have a rest of good afternoon. Enjoy the weather. If you are not here in Illinois, in Chicago, because it's very cold around, but see you soon. Next week, we're going to have more trainings. I'm going to start with the marketing on March 2nd. I still have scholarships. And also we have basic, like a refreshment for basic housing counseling. And still we have a couple of scholarships. So go into our website and join our training. See you next week, everybody. Thank you, Chris. Thank you so much, Kristen. Thank you, Legal in Chicago. And everybody have a wonderful afternoon. Bye-bye. stay here for another 3 minutes. 3:30, I'm gonna close in the session, but if you want to click in the training evaluation or chat with me, if you want to get the training, or if you don't know what are the handouts, so let me know. I'm here until 3:30, okay, guys?
All right, Vivian. So I've copied all the questions from the chat. I'm gonna send you a follow-up email with answers to those questions. That's okay. Yeah.
Thank you so much. So yeah, in the way we can just, I can share, I think tomorrow it will be nice, or just let me know when you can. So in the way I can send only one email with the answers plus
Okay. Perfect.
plus the information that we have here. Okay.
Yep. I'm very happy to help.
Thank you so much.
Also, if you have any feedback on presentation, if anybody gives me any feedback any evaluation that I can improve on next time, I'm very happy to hear it. So.
Oh no, of course, yeah. I will share the evaluation with you. I don't see like
Okay.
many people took it today, but I think so. It's gonna come after we send the email.
I'm gonna.
Mhm.
Yep. Nice
Thank
talking to you.
so
Nice meeting you
much,
for the first time virtually. Last night anyway. Yeah.
Thank you, and congratulations
Thank you
for the clinic. This is very, very
I'm very
helpful
happy
for
to
the
hear that. Thank you
community.
very
Thank
much.
you so
Enjoy the rest
much.
of your day.
You too. Bye-bye.
Bye now.
You too. Bye-bye. Okay, guys, I'm going to close now. As you hear, and we are going to send you the answers for those questions and also the information that I'm sharing. I hope I can see you next week on our trainings. Goodbye now, okay? I just say goodbye like 10 minutes ago, but this time is for real. Bye, guys. Take care.